Hello, everybody, and welcome to the show today. We're talking about taxes today, but most importantly, what to do to not have to pay as much taxes by planning properly. And then if you get in trouble with the IRS, how you resolve those issues. So with us today is Ben Golden. Now, Ben's actually the CEO of Golden Tax Relief, an organization helping individuals and businesses with wage garnishments, delinquent tax returns, bankruptcy, and more. Now, Ben takes the time to carefully review each unique case and develops a plan that will resolve tax problems quickly and efficiently. And we're going to talk about how that works today. Now, Ben felt it was important to open Golden Tax Relief because of his own past experiences with the IRS. In 2012, he had his identity stolen and someone tried to file his taxes without his knowledge. Now, it took several years, letters, and calls to the IRS, and he finally got straightened out. But what a mess it was. So as an enrolled agent, Ben knew how the IRS worked and yet was extremely frustrated to know what needed to be done and be unable to get their help. He could only imagine how someone who doesn't know or understand the IRS must feel. So dealing with the IRS can be terrifying for a lot of people, especially someone who's not had to have to go through that before. So Ben is passionate about helping people that find themselves in a very scary situation of owing the IRS money, peace, protection, and prosperity. And he looks forward to sharing this information with us today. I'm really glad he could be here. So Ben, thanks for joining us today.
I really appreciate it. Thank you for having me.
So I kind of went through the same thing you did, actually. I had somebody it was a weird thing years ago. Somebody filed taxes on my behalf, which I didn't know about. And now I still have to have like a special PIN number. It's like a crazy experience to go through something like that. So I'm sorry that happened to you.
No, I mean, it's part of it. And you would think that being a tax professional, that something like that wouldn't happen to you. But believe it or not, I'm just a regular guy too. So some person from Arkansas decided to file my taxes for me and said that I made all this, just a lot of money and had all this money withheld. And they tried to take $80,000 from withholdings out of a tax return. Thank goodness the IRS stopped it. But it took years for me to fix.
Yeah, that's a crazy situation, but at least he gave you a raise.
Exactly. I did get a raise that time.
Well, you do a lot with tax planning, which I want to talk about that as well. But really want to talk about tax resolution as well, because we never talked about tax resolution on the show. And I don't know why we haven't, because a lot of entrepreneurs are not the best with their numbers, as you already know. So let's talk about that. Why, in your experience, do you think that people fall behind on taxes to begin with?
A lot of clients that we have are not bad people. They don't expect to get into the situation and they just find themselves there. So, catastrophic events usually happen, like a divorce or a large medical issue in the family, something that would, I would say, derail or make them pivot to stop thinking about finances and taxes, and then they just start living. And it's no fault of their own. They just look up one day, they've been living their life, and oh my gosh, I haven't filed taxes in 4 years. What do I do? That's normally what happens, and people find themselves in that position. Or if you're a business owner and you have to pay rent, you have to pay your power bill, you have to pay your employees, you don't have all the money to pay everything, so you slow down on paying the taxes for the employees. That's really some of the ways that people find themselves in a bad situation.
Yeah. And then it builds up and compounds pretty quick from there.
I mean, I don't know about you, but my kids, I turn around and they were 7 years old, and I talked to my son last night and how he's a senior, and I'm like, where does the time go?
Yeah, especially with kids. What happens in those situations? Do you find that a lot of people then try to handle the IRS themselves because they're embarrassed, or does that not happen? And if they try to handle it themselves, what kind of problems do they run into trying to do it on their own versus working with an expert?
It's sort of like if you got charged with a crime, would you go to court without an attorney? Probably not. A lot of people try to deal with the IRS themselves. And so that's sort of the way that I liken it to the fact that you don't want to go to talk to a judge without a professional there with you. You don't want to talk to the IRS alone. because IRS agents and specialists are trained to not only understand what you're saying, but also figure out what you're not saying. And they'll ask a question just to figure out what you're not doing. So you got to be careful on how you talk to them. A lot of people have done this because, the time just flies by, like we were talking about, and things just happen. They find themselves in this tough situation, and now I want to go buy a house. I got to have my taxes filed. I want to go buy a car. I got to have my taxes. The other thing is children's education. Oh, well, I don't have my tax returns done for the past couple of years. I can't get that loan for my kids for educational purposes. So much of it deals with credit and not having credit and not proving income. And so people just find themselves in that curious situation of how do I do it and what's next? And they don't know what the next step is to take.
What are some of the most effective resolution strategies that you see? I mean, if people get into trouble, what's really possible for them to be able to get out of trouble? I mean, what's possible to potentially get out, and what are some of the methods that actually can be used to get out of trouble?
So my job is it's sort of like football, right? Um, if I'm the coach on my team and I'm playing against somebody else, do you think that I would know a play if I was given their playbook? Do you think I would know what to do if I knew if they line up in this formation, then this is where they're probably going to go? Do you think I would have the upper hand?
Well, the Patriots definitely did.
Well, definitely. So, I mean, that's what we do. We know the Internal Revenue Manual, which is the code of policies and procedures that the IRS has put in place for their employees. Well, we have that. So we know what their next step is. If we know what their next step is, I know how to plan properly. So I'm going to look at how much income you make, what assets do you own, and then from there, I'm going to say, well, how much do you owe? And then we can put and use the tools available to us that you qualify for. We can put those in place and use those tools to either get you out of the situation, to negotiate with the IRS to lower the amount, or to just ask the IRS, look, we can't pay anything right now. Can we just put this off for a little bit of time? That's possible as well.
So a lot of solutions. They'll work with you on a monthly payment plan. They'll put it off for a little while.
Yep.
You can even negotiate down what you pay. Can I hire you every year to negotiate on my behalf for what I have to pay?
Yeah, you wish, right? No, that's more of the planning aspect. If you don't want to pay taxes, you plan not to pay taxes, right? Tax resolution is, you don't plan for that, right? That's fraud. So it's like driving a car. Okay. You know why the front windshield is as big as it is and the rear view mirror is so small? It's because your imminent danger is in front of you. So you have to plan for your imminent danger. You have to plan for the taxes that are in front of you. But that rear view mirror, you have to know what's behind you, and that tax resolution will catch up with you and wreck your car if you're not careful. So you have to keep your eye on your six, but your imminent danger is in front of you. So that's why a lot of the times I tell people, when you're walking down the dark tunnel of resolution and there is no light, if we don't fix the future, all we're going to do is push you into another dark tunnel. So you have to fix future taxes, and then you have to make sure, okay, have we filed everything? We do an investigation. What should we do? What do you owe? And then from that, we figure out which tool to use to make the stuff in the rearview mirror go away.
Makes sense. And are they willing in some cases to settle it for less than what you owe?
You would be amazed at some of the things that we've been able to do. I had a client lives in California, owed $372,000 through the entire process, had not filed tax returns, filed those tax returns. They owed $372,000. We were able to negotiate with the IRS for them to accept $16,000. That sounds great, right? The
Yeah.
IRS accepted 16 grand, but then I said, wait, hold on. 16 grand is wonderful. However, I did an addendum to the $16,000 and they had to pay $8,000.
Wow. From 300,000 plus.
From 372 down to 8,000. Now, I'll tell you, that's not something you do overnight. You didn't get in this overnight. You're not going to get out of this overnight. It's not that easy. It took us about 18 months to do that. However, it's sort of like baking bread. If you take that bread out of the oven too fast, you're not going to get to that delicious, wonderful bread. So you have to let it bake. You have to let it sit in that oven. And believe it or not, when it's ready, then you can negotiate with the IRS and get it done properly. Now, they qualified for using that tool, and not everybody's going to qualify, but I have absolutely no doubt that no matter the situation, we can greatly improve where they are.
Let's say you have somebody that doesn't not file taxes, files taxes, everything's going good for years, changes accountants, and then takes the taxes and has the new accountant handle it. And the new accountant screws it up. The IRS comes in, does an audit, doesn't like the way all the documents, because they can't verify everything. IRS says, you owe this much money. But then years pass. Let's say 10 years pass. And then the IRS hasn't done anything. Is there a statute of limitations? I'm just asking for a friend.
So, that's one of the tools that we use. There's different types of statutes of limitations. There's something called a CSID, or a collection expiration statutory date. It's a 10-year window. So let's say that you file your 2012 tax return. That tax return is filed in 4/15 of 13, right? So from 4/15 of 13, the IRS has 10 years to collect that money. Now, if they don't, then they say, okay, well, I can't collect it in 10 years. I'm going to walk away from it. So that's the statute of limitations that you're talking about. There is a 10-year statute. However, if you do something like a bankruptcy, it can extend that 10-year period.
Oh, wow. That's interesting. What if you did the bankruptcy after 10 years? Does that have an effect?
No. Once that statute of limitation hits, then it's gone. There are some very special cases where the IRS, before that 10-year window hits, they file for a judgment. Okay. They don't do that very often. It's only in big cases like Al Capone. That's a great example of them moving that extension of that statute of limitations, because they either feel one of two reasons. Number one, they think that you have a potential to collect, a very strong potential to collect, or number two, you're a celebrity and they want to make a mockery out of you and your name. But understand now, Al Capone, they could not get him on all of the murders and the drugs and the money laundering and all that kind of stuff. You know that he went to jail for tax evasion, right?
Yeah, that's how they finally caught him. Yeah.
And it had to do with, it was one check. One check was written improperly, and they had some auditor with the IRS he was on point, and he saw it, and then he pulled that string and it unraveled everything.
Huh, that's interesting. That's really cool. I have to tell him more about that. I like that. Tax evasion versus tax avoidance. Besides the legality and one being highly illegal and one not, what it really is the difference between evasion and avoidance?
I love the question because, one of them you get the special bracelets. You know what the special bracelets are?
I know.
We call those handcuffs where I'm from. So, it's all about intent. So if the IRS can prove that you intentionally defrauded the United States government of taxes, that's going to be your evasion. You get to go to jail. You do not pass go. You do not collect your $200. Avoidance, on the other hand, is using the rules that the IRS has given us. The tax code, the regulations, case law. We use a lot of case law when we do tax planning. We use those rules and regulations in order to legally push expenses or profits or whatever it may be onto the owner of a company, per se.
Makes sense.
One's legal, one's done through proper planning and using legal techniques to do it, and one is shady and shows intent that you want to do it.
What are the different ways that you see people can get in trouble with the IRS?
A lot of people want to work under the table. A lot of people want to create and make money without it being taxed. Look, there's no really thing like that in the world. You're either going to be taxed on it or you're not. Use the code to your advantage. More times than not, as a planner, I can go in, put a proper plan in place, be able to protect you from legal, you know, events, be able to reduce your income taxes, and in addition to that, build your credit as well as create, a good estate tax plan so you don't have to have death taxes as well. A great planner, somebody that can do that for you, I mean, they're worth their weight in gold, but remember the problem that we're talking about here, it's timing. A lot of people don't understand that timing is the key. Planning is all about what can we do tomorrow. There is no retroactive planning. There are some things that we can do retroactively, but planning is about tomorrow. And the problem is everyone is reactive. We live in a microwave society. Planning is not being a microwave popcorn. Planning is going out and cutting the corn and deciding what to do with it. At that point, it's how do we want this to come out? Do we want this to actually be, cream corn, or do we want this to be popcorn? And there's a big difference because one plans for where we're going to go and one reacts to its environment. And we don't want to react to its environment. I found in resolution, that's all we can do is react.
So the key is really to stay ahead of it and not ever get behind it.
Exactly. And I have absolutely no judgment for anyone that has, misfortune or problems that get into these situations. It's not about, you getting into them. It's all about where do we go from here and how do we get out of it and what does tomorrow look like as opposed to what does yesterday look like.
So I'm not saying this is me. Could be a guy that looks just like me, acts just like me, owns a company just like me. But let's say that person is 1099, right? Instead of W-2, because a lot of entrepreneurs, I think, are that way. And then the company gets bigger and the accountants are finally like, you can't do that. You got to go W-2. You got to see that quite a bit. So when is that line? Like, when do you jump from an entrepreneur from that 1099 level to a point where you just can't do it anymore? You got to go to W-2.
If you're a 1099 person, contractor, independent contractor, a sole proprietor, number one, look, you have to get protected. Let's protect your assets and make sure that nothing happens that you do can hurt your family. Number one, that's the planning side of Ben coming out. This is what we need to do to protect everybody else and yourself. If you're making, $30,000 to $50,000 a year on a W-2, on a 1099, it's time for you to make movements and start planning, because guess what? The tax man's eating your lunch. And if you don't plan, he's going to continue not only eating your lunch, he's going to start taking more and more and more. So that's when people get into a tax resolution problem is, I'm making $60,000, $70,000, $80,000, $100,000 a year on a 1099. What do? I know I bought this house. I have to pay the mortgage. I can't afford the mortgage and the taxes. They get themselves into a pickle. And like I said, Father Time never stops. So 3 years down the road, they look up and, oh my gosh, what do I do now?
Well, then they start to accumulate penalties as well. So how do tax penalties work?
So let's talk about payroll for just a second. Let's say that you pay your employees, but you don't pay the taxes and you don't file the return, right? Then you've got failure to file. You've got failure to pay. You've got failure to deposit. Okay, that's 3 on top of the other. And then over time, the longer you wait, the stronger the penalty gets, right? There is a maximum amount, but at the end of the day, you get to those maximum amounts, and it's roughly 63% of your total tax. So if I owed $100 and I didn't pay that $100 in payroll taxes, that $100 just became $163 over time. And that's another thing that people don't look at is penalties are on top of interest and are on top of each other. So everything starts compounding really, really fast. And you look up and now you owe double or triple what you originally owed. And that's when you need to go to somebody and say, can I get out of the penalties? Is there something I can do there? Or can I negotiate? Or do I have to pay it back? Or maybe I filed my taxes wrong to begin with and we can amend them. People think they can only amend for 1 or 2 years. I talked to somebody just before this call, and we're going to go back in and amend their 14 return.
Wow, 6 years ago. So what happens with liens? You mentioned liens earlier. When do tax liens come into play? And what are things that business owners don't know about tax liens, but they probably should?
So a lot of people use the term lien and levy interchangeably. So let's define them real quick. A lien is when you owe the IRS money and then they put a forbearance against your property, right? So they say, you owe us money. You can't sell anything. This is a lien against your property. They file it with the courthouse. It's all legal documentation. And they don't take money from you right then. They just stop you from being able to sell anything. A levy, on the other hand, is they just go in and it's gone. Do you wake up one day and you look at your account and there's no money there? That's a levy or a garnishment, and they can take up to 70% of a W-2 wage. A lot of people don't know that. But, I mean, how are you going to live off of 30%? You
Yeah,
can't.
that's ridiculous. That doesn't even make any sense.
Well, you know why they do that. It does make sense if you're the IRS.
Yeah, because you can't pay it.
Well, no, because they're going to force you to deal with it. That's why they take 70%. They force you to do it. They don't want you to pay 70%. They want you to deal with it. They want you to come in and say, okay, now that I understand that I owe this money, how can I pay it back? And it's a tool that they use. A levy is a tool that they use to force compliance upon people. A lien just says, hey, look, you know you don't owe this. Now we're letting the world know that you owe this, and it's public knowledge. A couple of years ago, the IRS stopped reporting to credit agencies a lien. However, if you go and buy a house, they do the credit report, right? They pull your credit, and then they do a public search on you, and that's where they find you have tax problems. So, a lot of people get into tax problems, and it stops credit and things like that from them wanting to live their life. But the IRS is going to come in and force them to essentially take care of it.
What other tools do they have? Levies, liens. What other?
Seizure.
What's that?
Seizure. That they can just come in and take it. I had a client. They owed a lot of money. They had a secondary home. Guess what happened? The IRS came in and took the secondary home. Hey, it's not your private residence. Because it's not your private residence, they can do that, and they did do it. And guess what? There's nothing I could do to stop them.
Wow, that's crazy. So they just have the ability to just come in and do whatever they want. Ultimately, garnish your wages, take your cash.
Yeah, I mean the thing is, if you don't deal with it, the IRS just wants you to deal with it. If you don't deal with it, they're going to get worse, and it's a snowball. It just keeps running downhill and gets bigger and bigger and bigger.
What do you do if you're audited? Like, what does somebody do at that point? What do they call somebody like you that's a tax resolution specialist? Do they go back to their accountant? Because in that friend's case that I talked about earlier, the accountant that created the problem was the one that dealt with the IRS auditors, and then it's like thousands of dollars are charged, right, to deal with a problem that they ultimately created. So my friend told me from experience that that's probably not the route to go. So where do you go? Like, if you're audited, you don't want to go back to your accountant that caused the problem, I wouldn't think, but how does that work?
Well, it depends. People get audited for a myriad of reasons. A lot of people say there's something called a diff score, where the IRS red flags deductions and things like that you take on your tax return. That is true. That's one of the ways they find out if you're being a little aggressive on your deductions. But A lot of the times, if you go back to the same accountant, the question becomes, is that accountant self-dealing? Meaning, do they care about getting their own neck out of the situation, or do they care about getting your neck out of the situation? If it's, especially if it's something that they could have caused or could have prevented, maybe they are responsible, and maybe there could be a malpractice case there, or something there that the taxpayer would want to look into. I really encourage people to go and get a fresh set of eyes, a new accountant, new CPA, a specialist like myself to look at it, to make a decision. Is this something that they should handle, or should you go back to your old accountant? You should get that second opinion.
What about, how do I do this right way? We talked a lot about what to do to get in trouble, and you, much like attorneys, if you just go help in the beginning and do it the right way, you would be able to save a ton of time, energy, money, and stress. How do we do it the right way? Like, what are some strategies to pay less taxes legally?
Be proactive. It's a lot about how you get paid. It's a lot harder for me to protect the W-2 wage of an employee if that's all you do. If you're an entrepreneur who has a business, and it's a lot easier for me to do that because there are more opportunities for me to create deductions for that person. If you have a W-2 wage, there's not really many things you can deduct. There are some strategies that you can use, but you've got to invest to create those strategies as a W-2 employee. But if you own a company, it's a lot easier for us to create some of those strategies. And the strategies get pretty complex, or they're pretty simple. Do you want to do an administrative home office? Yes or no? Do you want to do an accountable reimbursement plan? So monies out of the owner's pocket that should be for the business are reimbursed and it's not income. Or do you want to get really heavy and start paying your children from your business to do work for your business? Do you want to create trusts to limit the ability and capability for the IRS to go in and tax different types of income? There's multiple ways that we can structure things properly to stop that payment to the IRS. However, there again, it's all about the timing and the planning and how much money you make. Believe it or not, if you make $20,000, there's less opportunity to save money in taxes with you making 20,000 because there's less taxes than there is somebody making, $420,000.
What about some other strategies when you're preparing your taxes? Like when you're getting your tax returns prepared initially, just what are some handful of strategies that you could think of that can help somebody pay less taxes or avoid issues?
Get your books done. That means that you need to have your bookkeeping done. You need to be able to track and trace every single expense. You need to know where you spent your money. That's a great thing to do, even for a business owner, so you can know how to, manage your expenses and things like that. So number one, know where you're spending your money. Number two, you need to make sure that you go to someone that is a professional that knows what they're doing. If you spend money in your business, that money should have a name somewhere. You should ask your accountant, your CPA, whomever, questions about it, so you can open the lines of communication and say, what do I need to do? What can I do? If you go to that CPA, that professional, and they're not interested in planning, they're not interested in helping you save money on taxes, go to somebody that will, and that is proactive, and somebody that it's important to make sure you pay the least amount of money. I mean, Ty, could you use an extra, $12,000 a year, $1,000 a month in your personal life if you were able to save that money in taxes?
Oh, absolutely. I could think of a lot of ways: skydiving, flying more planes. I mean, a lot of it. The IRS takes too much of my money now, which
It
is why I
sounds
need.
like so much fun. I need to hang out with you.
So let's talk about scams, because like people call me all the time and say they're from the IRS with this weird accent, and they threaten to turn me into the FBI if I don't pay them with Target gift cards. So that seems like an obvious scam to me.
That's
But
great.
there are other less obvious scams that I think people are exposed to. So what are some of the most creative scams you're seeing out there that people should look out for?
There's a lot of things that people do. People are really targeting in on Social Security income. and people that have Social Security income, they'll send you a letter, and the letter looks really official. It'll say Social Security, SSI, the letter was, I've seen some letters that just about would fool me. And you call the number on there and you're like, oh, wait, no, this doesn't feel right. The IRS is never going to call you. Okay. The scams are getting more and more advanced, and they're sending letters out, and they look like it's the truth. Carry that letter to your professional. Let them look at it. If you don't think you owe money, you should not pay anyone. The IRS is never going to call you and ask for money. That does not happen. The reason why is because the IRS cannot prove that they called and talked to you. They talked to someone, but they didn't talk to you. So if the IRS cannot prove that they delivered the mail, that they sent you information, that they notified you properly, they cannot collect from you. So think about, what are the official ways that someone can contact me to get me to, pay them or talk to them or have a true conversation. So make sure that it looks official. Take it to a professional. I mean, even if you have to pay, a couple $100 to your CPA to say, is this something that is a scam or not? And they can tell you, because it's easier to pay a couple $100 to a CPA or a professional than it is to lose $4,500 or $10,000 to a scam artist.
What else do you think, as we get ready to wrap up, Ben, that's important when it comes to tax resolution or prep that maybe we didn't talk about that you think all of our listeners should know?
Don't wait. It's not about what happened yesterday. It's about what tomorrow looks like. Don't be ashamed. People go through difficult things every single day. It's not about where you're coming from. It's about where you're going to. You can't board, or you don't board a plane, train, or bus without knowing the destination. Your taxes should be the same way. Sometimes we want to be on an airplane, but I may not be able to afford an airplane. I may be able to afford a Greyhound bus. It'll get us there. It's just going to be a lot more time and a lot more difficult. But, planning is the key. Be proactive. Don't stick your head in the sand. Do what you need to do to ensure that your taxes are taken care of. You want to save for your children's education. You want to save for that house. You want to have the things tomorrow that others don't have. Well, you need to have a plan today that others don't have as well. Because if you plan for a goal, then you'll always hit it. If you don't know where you're headed, you'll never get there. So, or you'll always get there because you'll never know where you're going. So make sure that you plan, make sure that you're not ashamed, make sure you start moving today, and don't let your finances happen to you. Every dollar should have a place. In your personal life, every dollar should have a place. In your business life, every dollar should have a place. Name those dollars and make them work for you.
Ben, do you help people in all 50 states?
I do.
Cool. Where can everybody go to learn more?
You can go to my website, www.goldentaxrelief.com, or you can give us a call. That's www.goldentaxrelief.com, or you can call us at 844-229-8936. Once again, that's 844-229-8936. We work in all 50 states, and I'll tell you, I don't work with everybody. You've got to qualify to work with me strictly because I found that our unique and different approach is just not right for everybody.
I appreciate that. I was just taking a look at your website again. So everybody, there's so many things here. Law is like, and Ben, thank you so much for tuning in. I really appreciate you coming on with us today. Everybody, it's like law. I think accounting and law are very similar in the sense that if you do the right thing from the beginning and you really work with an expert, that can help you, then you can avoid so many issues. And those issues cost you considerably more time, energy, and money than just going about it the right way. But in my life, I've learned that when you work with somebody like Ben that's a resolution person that can handle both sides and live the life of the resolution side, then they can help you better prepare as well. It's just from my experience. I think many of you have felt the same thing. When they see the other side, when they work with the IRS, they help resolve these things, then they know in the beginning how they should be done to avoid the issues on the back end as well. So if you want to talk more with Ben and his team, just make sure you visit goldentaxrelief.com, goldentaxrelief.com. A lot of great information here, including a blog on Ben's site, a lot of really good details on a lot of things that we didn't have time to jump into today. So make sure you schedule time, talk to him more about preparing your taxes. If you're having troubles now, they can help you with that as well. Even if you just like a lot of information about what to do and how to do things the right way, make sure you check out their blog as well, because that's really good. And it's all at goldentaxrelief.com. So make sure you visit goldentaxrelief.com and learn more about avoiding issues with the IRS. And especially if you have issues now, schedule a consultation to talk more, because there's a lot of things you could do to get those issues resolved. So make sure you visit goldentaxrelief.com.